just looking at this one screen, right? What I do is I usually break my eyesight, I guess you could say, into sections, because the only way you're really gonna see support and resistance is when you get that up and down volatility. If you're just in an uptrend, then there really is no support and resistance for the most part. You know what I mean? You look for them
Gotcha.
when you hit certain points and start to reverse from those points. So
Right.
if I was looking at this chart, let me see how much I can break this, chop this up. There we go. One, two, three. I can see one, two, three, four, five, and then six. So I can see six. Let me see. Let me get real creative with this. I can see about six different I guess I would say sections in my mind. So I see one right here, right? I
Right.
see another one. Let me see. How do I lock this in right here? Here we go. This would be. Oh, hold on. Oh, I forgot I had a damn tool locked on. Hold on. But we do have another one right here. And I'm gonna show you why I'm picking these ones specifically. These are what I'm gonna use for the basis of my support and resistance when I set it up. God damn, they getting hit 9,000.
Wow.
$9,000 Bitcoin. We got it. Give me 1 second. There goes the other brother. What's going on, brother Drew? How we doing over there?
That's my stuff going on. Hold on.
Let me see. Help, can you hear me, brother Drew? Yo, what's going on, brother? Can you hear me?
There we go. All right, I'm in.
Yeah, you can hear me now?
I hear you loud and clear, brother.
Cool, cool, cool. So look like you in motion.
Yeah, man, I got a new phone, so it took me a while to get up and running, but I'm back up and running. Fair. I
Oh,
broke my phone.
damn.
So yeah, I'm on my way to the house in like 3 minutes from my driveway, so we good.
Okay, perfect. It's recording right now anyway, so all this right here be recorded. So, all right. So, basically, what I was doing, first and foremost, with brother Danto was going through, and I'm showing him. He was like the hardest thing for him to do is actually like I support and resistance. So I'm showing him how I do it is I break down a chart into sections where I see the convergence or that what would it be, the consolidation period at. But that's where you get support and resistance at. If something's just going in a straight uptrend, ain't no support and resistance for the most part. If it's going in a straight downtrend, ain't no support and resistance for the most part. What makes that support and resistance is those times of consolidation. That's what gives you the support and resistance. So let me see. Right here, specifically. So I'm showing him how I break this down in different sections, and I'm going to show you within those sections where that support and resistance is at. And I'm gonna set my chart up and I'm gonna get rid of all these circles. But you're gonna see how I based everything at. Then right here.
I'm about to get my pen and pad soon as I touch down, you know what I mean? So I don't miss that.
Now you all good. You all good. Let's see. There we go. Even better. Let me clear these up for us real quick, brothers. Even better.
That's the only link that I'm missing really is this chart reading. Everything else is
Okay.
starting to make sense. Yeah, the more videos I watch, and it's trial and error. You know, just going in, playing with the numbers on my CDP. You know, watching some videos. You know, just doing my own due diligence and just applying it. It ain't bad, but I've been missing shit, man, because I don't know how to trade yet. So, you know, them signal calls,
Look,
I can't do that.
right. Got you. Well, it's a process, man. It's a process. It don't force nothing if you ain't ready for it. You know what I'm saying? It's all gonna come in due time. All right. So the first thing you do, we see you got 1, 2, 3, 4, 5, around five sections where I'm gonna pop off or show you where I see the support and resistance at. Now, support and resistance. How do I put it? You got support and resistance lines, and then you got trend lines, which act as support and resistance lines. Normal support and resistance are horizontal lines that price action comes to and is either rejected to the upside or the downside. Now, sometimes you got flat bottoms and flat tops where it'd be a real clean floor and a real clean ceiling, whereas you know, like, okay, this is the bottom, this is the top. Just for instance, let's see. Let's pick up our horizontal line. If we look down here, right, we can see for the most part, that's our bottom. And then if we clone that, that's our top, right? Bring this down a tad bit. We see hold on, what happened to it? There it goes. We see we got our touch points right here being rejected. Go back to the downside. Now you do have a lower level of support right here, but it never got hit again. What you usually want to look for on strong support is multiple touch points. So now within support and resistance, you can also find support and resistance. So just within this one little bubble, I'm gonna find some more support and resistance. Just real simple. What we on right now? We're on a 4-hour chart. So we're looking at 4 hours. Remember, the chart you're using tells you what support and resistance you're utilizing. So right now, anything that we see is 4 hours support and resistance. So let's see. We can see, or I can see real clear. Oh, hold on. We don't want all that yet. And you want to use your cursor. If I can get this thing to follow me again. Hold on. There we go. In fact, let me make that a little bit thicker too. Let me make my cursor thicker so y'all can see it. Oh, give me 1 second. Give me 1 second, brothers. Let me see. Let's go to settings. Where is appearance? Crosshair. Here we go. Let's make this a little bit thicker. Yep, there we go. There we go. Perfect. All right. So now we can see where my cursor is. So now what I do with this is I use this as a catalyst to find my support and resistance. So I measure, basically I go around and I measure. And I see where the most wait, what? Okay. I look for the confirmations of where I see certain touch points hidden. So right here, I can see and what you'll see is price action retest certain support and resistance lines over and over again. Just for instance, if I go and look at one of the Bitcoin charts I created, damn, Ethereum down to 215, boy.
Wow.
Trying to rack up. It'll be 300 next week.
That's hurting people, boy. Let me see. Ethereum was just $350.
I'm finna buy some as soon as we get off.
So when we're looking at, pay attention to my yellow trend line. This is a trend line, but it acts as support and resistance on an upsloping channel. So whereas when I first made this, I made this based off of this resistance, this resistance, this resistance, and this resistance. And I just extended it. I extended it before any of this stuff came here because I know, I'm like, man, price action tends to retest certain trend lines. So the last time it tapped this was in May 30th, 2019. It didn't come back full circle and come back down and retest it right here on the. Now, remember, this was resistance. And always remember this about support and resistance. Support and resistance is one and the same, just in different time frames. Always remember that. You might want to write that down. Support and resistance is just the same, just in different time frames. It's the same line. There's no different. This same line is resistance right here. When we follow it up, let me see. In fact, I can where's the one we was just using? BTC. What was I doing? The dollar index. There it is. So what I based that off of? These two right here. Okay, so let me get this. Let me pull it again, in fact. Slide him right here. And now all I'm going to do is I'm going to extend it. So I'll come in here like so.
Is support and resistance one line, or you have support at the top and resistance at the bottom?
No, it's the exact same line. I mean, no. Okay, it can be the same line, but what you'll have in between them is support and resistance also. But if one breaks the other can turn into support and resistance real quick. I'll show you what I mean.
Okay.
Where's that extension button at? Man, they didn't upgraded this so much. Where's that extension? Coordinates, visibility, ranges. And it's put me at a little bit of disadvantage, god damn it. Center right, visibility, normal. That's cool. I want the damn extension. Show distance. That's crazy. I just draw it. Let's see. So clean like that, right? Resistance, resistance. Look what happened when we broke it. This is your first retest right here. Let me know if y'all see that. Let me open this up a little bit. So you see this retest right here? In fact, okay, yeah. So we came down. Remember, this was, oh man, put that back. That was your resistance turned into support once it was able to break it. And that's what you're going to see happen over and over and over again. When there is support and resistance, when one breaks the other one usually turns into the other. So when resistance is broken to the upside, what you'll see happen is it turned into support. So what happened? We broke it, we back tested it, gave us a real nice blast off, came back down, look, back tested it once again. This is your first back test, second back test, blew off. Now remember, body closings are just as, if not more important than the candle wick closings. So what we have over here are candle wick confirmations, meaning they got here and it got completely rejected by any type of chance from the actual bears. Here, the bears were able to break through, but they weren't able to close anywhere past that resistance line or that support line. Gave us a real nice blast off again, came back down, tested it. Look, in fact, every time, damn near, we came in contact with this line after breaking it, it gave us the same reaction. Last off. Until this last time. Now look at this. 1, 2, we broke it, and then that's what broke the camel's back right there. Broke it to the downside. Now, pay attention to where you're at right now and then follow the line. Look right over. Bing, you're hitting this right here. When I see stuff like that, that lets me know that's a support line right there. Do y'all see that where that red line is? Where price action is right now?
Yeah.
You see that, Brother Williams?
Oh, yeah, I see it.
Right here. That's showing you that it's hitting that same level of support. So you could get a bounce here. You could get a bounce. Hold on. Here. Right? We've been here before. We've seen this before. Now, based off of just these two levels, we're going to go and scroll back and see if we've hit these before. We go look at a weekly first. Okay, wait. What's that? Peep that. Peep game. Look at this right here. Resistance and resistance. Once again, what was it over here, though? Support and support, right?
Right.
So I'm showing that the exact same thing that happened with this upsloping trend line where resistance got broken and it turned into support. This same resistance. Now, mind you, this is resistance from 2018. This is from April. Yep, the month of April 2018. Fast forward, that same resistance is now support. So how strong is that? Now going back and looking and seeing how strong that resistance was. Let me see. Let me shrink it down. There we go. We may see some nice support come in like we did last time we hit that. Hold on real quick. There we go. So now what we're looking for is a strong rejection right here around this $9,000 area. And they seem to be pulling it off right now, keeping the price above that $9,000 area, keeping it above the $10,000 area. You know, if you look across the market right now, look all right here, these are all Bitcoin prices. Look, they steeping under that $9,800 price, and we get knocked right back up. So they're trying to defend it. They are trying to defend it. Let's see what happens though. Open it back up. Well, already a nice defense. Bulls trying to push price action back up to the upside. So what this could end up being, what time is it? Okay, so the 24-hour day just came in. That's another thing. This right here is a brand new candlestick that just started. Not even 33 minutes ago. Good. So we're already starting a new day off. Breaking the previous day's candle closing or opening, closing. Breaking the previous day's candle closing, which usually ain't a good thing. And actually breaking the last couple of candle closings for about this back in, we're still in July. This is June 22nd. It's June 22nd. Let me see. And we could see the same thing, because I know when we came down to 9,000 last time, that was after what, 14,000? Right. We hit 14,000, came down to 9, went back up to 13,000. Now what's going on here? 1, 2. Now look at this. Let's pay attention to something real quick here. That right there, right? Specifically, I'm just looking at patterns. Let's see. So the 3 red candlesticks right there. And what we want to do is clone you. Your little box at. There it is. And then we look at the new 3 little red candlesticks. And man, they look, man, them motherfuckers look damn near identical.
Yeah.
You know, other than this one having more push to the upside than a bad rejection. You know, I mean, you got your hammer. Now this one, like I say, this right here is a full day though. This one right, look, they pushing price action right back up. They pushing price action right back up. So we could get a nice rejection right here, right now, for this, because and this is another thing that I really want y'all. We back up to 10,100. This could be a nice rejection, possible 100x. Hold on, let me see something real quick.
Why do you want a rejection?
Because if we reject it on the downside, it means we pushing back up.
So it's gonna kind of mirror that just on the bull side.
Yep. Yeah. Okay. Remember, rejections to the downside mean you got a certain amount of buying pressure that's not going to allow it to keep going down. You know what I'm saying? You got a lot of buyers down there, they want to come buy it up. So it's going to automatically push price action to the upside. Now, you know, yin and the yang, just like on the other side, if you're going to the upside and there's a large amount of selling pressure, they're not going to allow it to go up. It's going to keep getting rejected to the upside.
Gotcha.
Hold on real quick. Yeah, a little bit too late to catch the next one. Hold on. Put him right there. Hold on. I had to come put me a little small, real small, 25x leverage to the upside, real close stop limit. Real close stop limit. So we'll let that one run. Well, damn. That was quick. Hold on. I got this on. I'm on 25x. I'm more high. Hey, I'm gonna tell you I was crazy. I just placed the order. I promise you, I just placed the order. I got in. How am I up? Oh, because I'm using 25x. I'm already up. I'm up 82%, 81%.
Using that 25x leverage.
Yeah, that's crazy. That's real crazy. Hold on, I'm gonna show y'all so y'all know I ain't bullshit. I'm talking about I just placed this order, not even shit, man. Right here with y'all. Hold on.
That's some quick money. Wow.
Okay, so let me see. $85. Oh, 85.09. Now where's it gonna go from here? I don't know. I'm gonna let it sit there though. Man, but we got a real nice rejection. This right here is this type of shit that you want to look for. We got a double bottom. We could see this at least, right? Let's just look at our tops. What's that? 10,600 from 10,000 from 9,099 back up to I mean, even if you could have just caught that right there, that small $100 pump on the 25x leverage, just one little wick right here. You could have played this one little wick right here. That would have got you. Let's see. Let's see. Just playing that one little wick. 25x leverage. We're up 2. We'll say 2%. That gave you back 50% profit already on 25x leverage because everything is multiplied. So if you're using 25x leverage, every time it moves 1%, you're gaining 25%. So if it moves 2%, you gain 50%. Now, just that the same thing goes the other way though. If it goes down 1%, you lost 25%. If it goes down 2%, you lost 50%. You see what I'm saying? So you got to be real sure about your orders. You got to be real sure about your orders. Litecoin holding good, still at 85 bucks, not really getting smacked like that. So now that we know that, and we're seeing that in real time. In fact, that's a good thing that this is happening right now, because y'all seeing in real time how price action gets rejected at certain support levels. Because when we first started looking at it, it was about to crash through there. That thing was real red. Look at that wick. Remember, this is the beginning of the day. Today's the beginning of the day. So we're seeing what's going to go on for the day now. And it's looking like the bulls are coming in full force. This thing could turn around and smack, and I'm talking about in everyone's face, blast right back up to the upside. Ethereum was just at 205. It's at 214. We were just at 9,999. We had $10,174 already. That's pretty fast price action, especially if you can catch it like this. You know what I mean? So let's see. And we just started. Was this a daily chart? Hold on. Get this shrinking back down. Go ahead, my brother. Y'all got questions too. Go ahead and ask. Say it again.
So what is it that you want to see? Do you want to see like the candle wick?
Me, okay, I blend it all together. Like right now, this whole chart, we got wicks and candlesticks, right? But I'm just looking for, in my mind, I see triangles, rectangles, I see parabolas, I see shapes. So right now, I'm showing you where I see a real nice floor at, and I'm pretty sure it's going to be a ceiling. So right here, right? This right here is a whole 2018. See how if I put my cursor right here, it looks like it came down and there was a floor that it just laid on right here. From here, keep going straight. Look, every time it came down here, nice bounce off of it. Now, if we scroll in, you're going to see it's not hitting it every single time, but just as an overview, you can see how, not even just right here. Let's scroll back. Look, starting right here. In fact, if I put a cursor right here, boom, and just leave it there. Look at that. Do you see that now? Boom, floor, floor, floor. Then come back around, turns into a ceiling. But do y'all see the floor though? Hold on.
Oh yeah.
That's what I want y'all to see.
It's like that first half which you was showing, and it got consolidated. Like it got consolidated right there, and it dropped down another level.
All right. Now consolidation is really sideways move. So this right here, from here to here is consolidation. Even though this whole thing is consolidation, this right here is real tight squeeze. Boom, right in there. I'm gonna say from this wick right here to right here, that was some real tight. In fact, look, I'm gonna show you even tighter, and we can find another top right there. Now let's open that up. Now you see the smaller support and resistance in there, within the support and resistance, within support and resistance.
Yeah, nothing broke out.
Right, there you go. Now, another thing that you want to look for in support is when price action hits it, you like, man, you can see a clear straight line where price action comes down and just gets like turned around. It'd be one thing, okay, look to the upside. It's real jagged on the upside, but it's always like that on the upside. The downside is where you usually find your real good support where it's just like a flat line. To the upside, it'd be pump down, pump, but you'll look for those tops like, okay, that's a top. Boom, that's the top. So I know for the most part, we're not coming up above 6,752 in this specific area that we're looking at right now. You know what I'm saying? In this specific area. Other than that, man, we're not coming no lower than 6,168. And every time we come here, we get rejected. We can see that's clear going back. In fact, look how far back. Hold on. Open this up. Look how far back this one support level goes. 1, 2, 3, 4, 5. This whole from September 7th all the way up until roughly October 31st, and then beyond, really. But I'm looking for the last connection for it. So once again, that's from September 7th to October 30th or 31st. This right here was a very strong. Every time it hit it, rejection. Every single time. That's support. Now, when it comes up and it hit its head and it can't get over it like it did, boom, broke back down, boom, broke that. I'm telling you, y'all gotta start making this stuff like not so much like technical shit. I look at this stuff like Okay, I see Mario running. Mario done broke down to the well. He trying to get up, Brent. He can't make it. He broke back down another level. Brent breaks this level, gets to this level. Brent he breaks back down. Not able to get it, but now this level is support for him. So he can try it again. Brent, break, Brent. You know how the game be like. The shit makes
Yeah.
different sense in my mind. I don't look at this so much like as technical as you know what I'm saying. I make it make sense in my mind. So this shit it'd be like a video game or like a character, and the character is trying to get above certain levels. And if he breaks down in certain levels, then he has other support levels that will help him to achieve his overall goal of getting to the top. That's the asset's overall goal is to get to the top, right? So if you look at it like that, right? Every time it gets to certain levels, it has another obstacle to overcome. So what it wants to do is change those levels that it hits and break to the downside, like right here, right? When it first broke, boom, we came down. Boom, we broke again. So every time we come down and bounce, in fact, I'm gonna place one right here, and we're gonna see what happened. Every time we hit one of these, this is another level after we get back up that we got to break on the way back. Almost like coming back to the boss. You got to be the boss again because you lost this time. This was an L. You took an L and broke down. This L broke down. Now look what happens every time you come back over here where you got your ass whooped. You get broke down again, broke down again, broke down again. Every time you come to that line, you get your ass whooped until you able to whoop his ass and then come back. Look, this line, whoop his ass, broke him. This line, whoop his ass, broke him. This line, and you see the connections. I'm not just saying this line, this line, this line. You seeing where it connects with it and then breaks it, connects with it and then breaks it. Now, this one we broke through. Now, remember, this is a day chart. I can guarantee if I break this down to a 4-hour chart, you'll see more confirmations. Oh, hold on. In fact, let's do that. 4 hour. And I'm talking about right here where you really didn't see any solid breaks per se. Where was it? Right here. Here we go. So we see we got two. Okay, so on a day chart, hold on. On the daily, you just got that one solid candlestick going through, right? There's another reason you got to learn. You have to learn to look at this in more than just one. Because we could look at this all day on a daily chart and do all type of technical analysis. That ain't got nothing to do with an hourly chart. 30-minute chart. There's so many paradigms to this, and I'm gonna show you. So this big one green candlestick, as we break it down, you're gonna start seeing confirmations. You're gonna start seeing confirmations of hold on. Let me do this. That's why it's doing that. Slide over there. Okay, that's what we're looking at right here. All right. You're gonna start seeing confirmations of this trend line, I mean of this support resistance line and this resistance line as we break it down more. So we'll go to the 4-hour. Remember, right now we only got one solid confirmation right there. We break it down 4-hour. So we scroll back. Now we got 1, 2, 3 confirmations, right? That's on the 4-hour. 2-hour. Which way? Is it backwards? Yep, here we go. So now we look at a 2-hour. We got 1 bounce, 2 bounce, 3 bounce. We still looking for that break to the downside. We go to 45 minutes. Let me see which way we looking. Is that the first break? Yes, it is. So now as we get more in depth and start going from a macro to a micro, look what we see. That rejection to the downside, right? And then retest to the upside, and then retest and retest. And when we break it down more, you can see even how more solid those tests were. I mean, that if you can't see that this is what you want to see. When you see lines connect like that, it's supposed to snap in your brain like, damn, how does it perfectly hit these lines when these lines are supposed to be invisible? You know what I mean? Now we had to break that down from a day chart to 45 minutes to see the connection, but it's connections on different time levels. Go ahead, my brother.
I was saying which one's supposed to be invisible. You talking about the bearish candle?
Man, all these lines are invisible. Ain't no such thing as, I mean, this is just all these candlesticks represent is price action. At the end of the day, support lines, moving, all that shit's invisible. Ain't no such thing. We put that shit here in order, as humans, we put those lines here so that we can sort of market predict and give us an understanding of what price action is. But at the end of the day, though, hold on, let me show you just a larger view of it. All this right here, all imaginary. You got to think about it. People make like each one of these lines, somebody made. I made this. This is mine. So when you do it, yours is gonna look different. Everyone in the world is gonna make a different chart. No one makes the exact same chart. That's how you know it's imaginary, because I made this. You know what I'm saying? You may see different support lines than I do. So you're gonna make your chart to adjust to your vision. Brother Williams is gonna see different support lines than I do. Even though the basis of them may be the same, they could still be off. You understand what I mean?
Right.
But at the end of the day, ain't none of these lines really here. This is how the chart really looks. Just like that. That's it. Anything else that's there, man puts there. That means if we got an upsloping trend line right here, somebody came here and drew the trend line. There's no actual line there though. Somebody draws it there, and it gives you a basis of, okay, this is where this is the direction price action was going. You get what I'm saying?
Right.
Brother Williams, you still with me?
Shake this on.
Yeah, I'm still with you.
What exactly is a retest?
A retest is when, I mean, exactly what it has sounds. What it sound like?
Like it's retesting it to see if it'll go past that point.
Yep. You retesting to see if you're gonna break it. So when we put back all of this mumbo jumbo, well, specifically this one. In fact, now we can go back to the one I was on. USD. Where's the index at? So specifically, when we look back at this one, right? This is what made the line. Remember, this is the creation of it right here.
Mm-hmm.
This right here is the retest of it. Right? Creation, retest. Creation, retest. Right?
Right.
So if we do, let's see. Now I'm only basing this off of this right here. There's one little section right here. I'm not looking at nothing else but right down there to see if I connect kind of solid. That's all I'm looking. I'm not looking at the rest of the chart. Hold on. Oh. There we go. Now, this is the creation. Blow it up. Look on the inside. Now you got retest to the downside and the upside. This is a retest to the downside. It broke it, though, and then look what happened. Okay, let me do this for you also. Let me show you something. Because sometimes a lot of these other characteristics make it hard to see certain things. So let's turn the wicks off for a minute, right? Turn the wicks off for a minute. Let's just look at straight candle body closing, right? You see how right here it was support, and then when it broke under it, 1 block, 2 block, 3 block, 4 block resistance, 5 block support, 6 block resistance.
Mm-hmm.
Those are retests to the upside and the downside. Where it came down here, it wasn't able to break it, and then when it came back the next day, he was like, "No, you can't even. You're not coming up." So we couldn't even break it to the upside. Now, what happens when you can't break something to the upside? You break it down. The same thing that happened when you can't break something. Look how many times we try to break it to the downside. 1, 2, 3, 4, 5, right? Until you came back down for 6 and you broke it. But it was only momentary. Now what happened with 6 is, and it's gonna start making sense. Like, damn, okay, we broke 6, but look what saved you and picked you up. That upsloping trend line from May. That saved your ass from drop. You see what I mean? This right here had you when you broke it. Okay, this right here is a support from this resistance. So this support turned into this resistance, and this resistance turned into the. You see the fucking paradigm here.
Shit, damn near identical.
Right. This support turned into this resistance, and this resistance turned into this support, right smack dab at the crosshairs. That's some funny shit. Because it doesn't have, this is what I mean. It doesn't have to do none of this. You understand what I mean? This could have easily came all the way down here, shot up here wildly. Like, price action could do wild ass shit if it wants to, but it tends to follow an order, a universal law, so to say. You know what I mean? And that's what you got. That's what you learning in charting is how to draw. This is like to be honest with you, this is damn near like divine mathematics almost. The shit that like just us putting these circles, like it when you doing it, it really don't make sense. But then when you go back and look what you made, you're like, damn, okay. This right here alone looks like, in my mind, it looks like something. I see a lot of things. But when you start looking around it, it's like, damn, okay, I put that together. Especially when you start with just bare butt naked this, and it ends up like this.
Mm-hmm.
And then it's almost like sacred geometry. That's what I meant, not divine mathematics. I meant sacred geometry earlier. But this is almost like Illuminati talk, because if I make this chart and you come look at it, you don't know what it says. Y'all get that?
Right.
You don't. Now, as a technical analysis, I can look at somebody else's chart, and if you know it, you can look and be like, okay, this is obviously this, but you're not going to be able to tell in a nutshell what every single line on somebody else's chart is. Only they'll be able to tell because they're the ones that created it. You see what I'm saying? Now, let me see. Let's go back to the index. USD. There it is. So, I mean, it's looking like a real good rejection right there. Looking like a real nice rejection. Now, we got any questions or comments so far?
I'm good.
And also,
right
brother,
now.
did you make it? Did you get your chart put up? Say it again.
What you making
You
your
said-
charts on?
Go ahead. Y'all can speak again. Say it again.
I'm just saying I was good right now.
Okay. You say you got. Do you have your chart pulled up, or you're not? You ain't gonna. You're just listening for now.
Yeah, I'm just listening.
Okay. What about you, brother Drew?
No, I didn't have any charts pulled up. I just been writing and taking notes on what you got going on the screen. But
Cool. That's cool. Okay.
What is that? Is that MetaTrader or something like that? Like, what do you use?
No, this is TradingView. TradingView.com.
TradingView. And you trade on Bybit, right?
Yeah, you trade on Bybit. This right here is only for charting software. This is only for you to chart different assets. It's not just for crypto. This is for stocks, futures, indices, a number of different tradable assets. And you can do this. Okay, so everything I'm doing, this ain't got nothing to do with cryptocurrency. That's why I want other people to realize when you come over here and get the chart class, this has absolutely nothing to do with crypto. This is just reading charts. If I pull up my Nike chart, right? We scroll back and we look at Nike. God damn it, I charted Nike the exact same way I do cryptocurrency. Came down, hit the 382 and bounced off it. Look, in fact, check it out. This is your 236. Look what happened. You came down. Now remember, the 236 was the resistance right here. See where? Okay, let me get rid of this because this is kind of old. Boom. This is what I was waiting for us to come down to the 50. We didn't make it to the 50. My sister had wanted to buy something when all that Kaepernick shit was going on. I told her, I'm like, man, that shit about to drop. I'm like, that was a publicity stunt. And I told her it would make some bullshit. I told her it may come down to the 50%, you know what I'm saying, to get in. But I told her to get in anywhere between 382 and 50. It didn't come down to the 50, but it came down to the 382. Bounced off the 382 one time, got rejected, solid, 236 rejection, broke back down, solid, 382, broke back up, right? Now pay attention. Hold on. Look what we broke up to. That same top. Same top. Now remember, these lines are not here. The shit's not here. That's what I mean. It's not here, but it still follows. It came up to that same top, broke it, broke back down, came up, broke it that time, came up, and then look what we dumped right back down to. I can just put a little line right here. The 236. You see what I mean? The shit's not here, but what happened? You got stopped out here, and for some reason, this many is a weekly. It's damn near 1, 2, 3, 4. It's damn near like 1, 2, 3, 4, 5, 6, 7. Damn near like 20 weeks later, you come back and retest the same damn area. Like, come on, man. That's why I say this shit follows some type of divine mathematics to it, because there's no way in hell you're gonna tell me that it's steady hitting all these points, and then you pull a Fibonacci up and it just everything adds up. It's divine. You know what I'm saying? But even right now, look what we're hitting. Double top. Boom, boom. If we ain't able to break this, Nike's gonna get rejected. Where could Nike fall to? 85.04 would be my first stop. Hold on. That would be my first stop. If we can't hold there, 83.45 will be my second. Then you got your 79.46, and then your 77.27. And that's just how simple I did that. That's exactly how you do charting. It's that easy, man. Where could it drop to? Okay, I look at prior support and resistance. That means okay. In fact, let me go backwards now. So get rid of that one, and that one. Now look what I did. We already hit our prior resistance here. So then what do? We start looking for past support and resistance. I see I got some right here. I see I definitely got some right here where the double top was. I know this was some solid confirmation. So what do? I place a line right there, right? That gives me now my support line, because we've crossed it already. You look at this right here as support, right? So now I know, okay, if we come back down, my first level of support should be at 85, 50, 85, 84, or whatever it may be. And then if I break that, what do I see? I see some nice little confirmation of consolidation right here. If I scroll back, okay, scroll back some more. Hold on. Okay. I'm seeing resistance, support. Get back, resistance, support. So then what do? I plot it. Boom. That gives me another level. That means real simple. If I break this one, then the next one to come is this one. And I use my analysis off of that. If I break this one, the next one to come is, thought I made some more, right here, in my opinion. Because we got one confirmation right here, another confirmation right here. In fact, let me just go ahead and make it because I see more. Support, resistance. Look at that. In fact, look at that one. It's always them green candlesticks too. Peep this out. It's always them green candlesticks too. On that one little line of support we're looking at, every single time, look, green, 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 green. Every fucking time a green candlestick is popping off of this one. Y'all see that? That's how, like, this is the basis of what I'm doing. This how it starts making sense. Like, damn, every time it hit this motherfucker, it's a fat ass green candlestick. Every single time. I'm talking about every time this came in direct contact with it. Right here, you know, we broke through. No, direct contact. No, that motherfucker is green every single time. So that tells you something. This means that what? What is this right here? The 81.61% support level is a bullish support level, meaning when you hit here, you can damn near right now where price action is, you can just come in and put us order right here. Look, I want to buy Nike at 81.646. Somebody that doesn't know charting, seeing it at $90, like, what are you doing? You stupid. It's at $90 damn near. Okay, that's cool. I see something you didn't see. I want to put an order in at 81.64. You sit back and you wait for your technical analysis to play out if you're sure of it. It's that simple. You know what I mean? Remember, you can use this for anything what I'm teaching y'all. This ain't got nothing to do with crypto and everything to do with assets. So, moving right along. Let me see.
So
Any questions? Go ahead.
What it's a small chart. It look like another algorithm at the bottom. Is that like the Fibonacci?
No. You talking about this shit down here?
Yeah.
No, these are oscillators. Hold on. Just so we got a simple explanation of what they are. Okay. Yeah. An oscillator is a technical used in conjunction with other or along with other technical analysis indicators to make trading decisions. An analyst find oscillators more adventurous when they cannot find a clear trend in a company's stock price easily. For example, when a stock trades horizontal or sideways, which we call consolidation, the most common oscillators are the stochastic oscillators, RSI, ROC, and the MFI. In technical analysis, investors find oscillators to be one of the most important technical tools to understand, but there are also some other technical and blah, 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 blah. Okay, the mechanics, blah, 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 blah. Basically, an oscillator is going to show you the momentum or the trend direction that a asset is in. So the ones that I like to use are called the MACD, which is moving average, MACD, so moving average convergence divergence. That's what MACD stands for, and that is, let's open it up. In fact, whenever you see this one right here, what you have is a MACD. Okay. What you have is a MACD and a signal line that when they cross over, it gives you a bullish or a bearish reaction. In fact, fuck, right now it's actually crossing over on a weekly. Shit, Nike might blast off. To be honest with you, looking at this on a weekly, man, look at this. It just came out of negative momentum. You're just cracking into positive momentum on a weekly, dark, nice green bar, and you got to cross over the MACD and the signal line. Nike damn near be a good entry here. You could still play some. Damn, this right here looks nice. This is a nice MACD. So with the MACD, let's go over to it. MACD is moving average, convergence, divergence, and it is a trend following momentum indicator that shows the relationship between two moving averages, right, of a security's price. The MACD is calculated by subtracting the 26-period exponential moving average, or the 26 EMA, and a 12-period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD line. So what did I just say? Basically, in layman's terms, this blue line right here is made of the 26, what they say, the 26 and the 13, 12, 26 and the 12. So that means that in fact, they got it right here, the 26 and the 12 moving average. And you can change this if you so choose. You can change this if you so choose. Now, the signal line, right, the orange line, that's made out of the 9-day moving average. Now, under here, these bars, these are negative. These are negative and positive momentum bars. When they're on top, they're positive momentum. When they're on bottom, they're negative momentum. Positive and negative momentum bars. So when you see this right here cross to the upside, like you just think this, man, this right here is a damn nice crossover on Nike, boy. When you see this right here, let's see what happened last time it crossed. Well, this was January 7, 2019. Let's see. Yeah, right here. We crossed over right here. And we didn't cross back over. Oh, hold on. When we crossed back over, that was June, right here. So let's see what the price, let's see what the profit would have been. Oh, hold on. So right here. So you would have missed out on all this, but once again, you waited for the crossover to come. You would have entered here, exited here, just using the MACD and signal lines. You know what I'm saying? Let me see. Just go back to it. See if they got any other traders. Okay. The result of the calculation is the MACD line. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD line, which can function as a trigger for buy and sell. Okay. So what they're saying is that the signal line is a trigger for buy and sell signal, just like how it just triggered me to say, oh shit, man, Nike's kind of bullish. That's because we have this MACD finally crossing over our signal line. The whole time right here, we had a nice disparity between the signal line and the MACD line. You're just getting that crossover right now. That's what you're looking for. But the most common method is, excuse me, The most common, okay, moving average convergence divergence indicators can be interpreted in several ways, but the most common methods are crossovers, divergences, and rapid rises and falls. Now they're going to get into the whole breakdown, the mathematics of it. That's not important. The only important thing is to know how to use it. So, do we understand the MACD now? Well, have a better understanding of the MACD. I'm not gonna say you understand it totally, but y'all got a better understanding of the MACD.
Yes, I do.
Good, brother Drew, still with us? Let me see. Oh fuck, he gone. Hold on, real quick, brother Duncan. Brother Williams. Hold on. Let me see what happened to this brother. I don't know how long he been out the loop for though. Oh, he said Hangouts crashed. Okay, let me send another link. Let me send him another link real quick. Copy. Close. Facebook. Here we go. There we go. Let me see. Let me get him back in here. Okay, so let me see. When he gets back, we'll double back and see what he didn't get.
All right, I'm back in.
Cool. What was the last thing you heard me say?
You were showing me those. Last thing I got a chance to write down was the oscillators, and you used the MACD. Then you went to this screen and it crashed out.
So what way we were going into the MACD?
Yeah, you was talking about the MACD.
All right, just run back through it again. The MACD is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. The 12 and the 26 is the default. The MACD is calculated by subtracting the 26 exponential moving average and exponential moving average and the 12 period EMA exponential moving average. The result of that calculation is the MACD line. So this is the MACD line right here, this blue line. This is the 26. You see how it says 12 and 26? It's the 12 subtracted from the 26. And it gives you an average line. So that's the average line. Now the result is the calculation. Okay, and then there's a 9-day EMA of the MACD called the signal line. And that's plotted on top of the MACD line, which can function. Hold on. %. There we go. Trades made by the security. Okay, the MACD, which can function as a trigger. Okay, so basically, when you see these crossover, they're triggers for buys or sells. So when you see that MACD cross over that signal line to the upside, let's see what happened when they cross it on the upside right here, first and foremost. This is May 14, 2018. Let's see. May 14th, 2018. So this is when you had that crossover right here. Everything else came after that one crossover, but let's see. Hold on. Let's see what on next. So then you had a very bullish crossover right here on the 1st of October. Let's see. Yep, 1st of October. Let's see. We got another bullish crossover right here. Let's see. That's January 14th, 2019. Kind of late, but better late than never because it gave us the rest of that. Right? We broke down again. Right here. We had our break to the downside, which gave us what we're looking at right now. And then, like I said, just right now, you're seeing that break to the upside on the MACD. It's just now crossing over that signal line. Now, also, it says traders may buy the security when the MACD crosses above its signal line and sell or short the security when the MACD crosses below the signal line. Moving average, convergence, divergence indicators can be interpreted in many ways, but the most common methods are crossovers, divergences, and rapid rises and falls. So what we're looking at, and now also what they're going to get into is the bars on the here. They're just negative and momentum. I mean, negative and positive momentum. So when you got a crossover, and now pay attention, when this goes into positive momentum, that's when you usually see the crossover. So this right here means that in the market, the momentum of buying is positive. The darker the bar, the more heavy that specific price action is. So if the bar is real heavy, they're doing buying if it's this blue turquoise color. Now, as they start to decrease, that means buying pressure is starting to decrease. It can get picked back up like you've seen and then fall out. Now, when it falls and crosses over, this is negative momentum. Now the momentum has shifted in the market to that of negative. You don't want to buy when there's negative momentum, unless you see what's called bullish or bearish divergence, which we'll go over at a later date. But that's just the catalyst for the MACD. Now, not to get too complicated with the Stokes, we'll start with a simple RSI, which is a relative strength index. Let's see. There we go. Now, relative strength index typically shows you when an asset is overbought or oversold. Let's see. Let's go find the. Let's find. RSI Investopedia. Here we go. Relative strength index. RSI. Okay, what is relative strength index? RSI. The relative strength index is a momentum indicator that measures the magnitude of a recent price change to evaluate overbought or oversold conditions in the price of a stock or the asset. The RSI is displayed as an oscillator. The RSI is displayed as an oscillator, a line graph that moves between two extremes, and can have a reading of 0 to 100. We don't care about when it was created. There we go. Traditionally, damn, 9,800. Traditionally, interpretation and usage of the RSI are that values of over or 70 or above, right? Meaning right here, the 70. Anything above that indicates that a security is becoming overbought or overvalued, meaning it's really valued at more than what it's worth. So, we shouldn't be buying it. And may be primed for a trend reversal or a corrective pullback in price. Now, an RSI reading of 30 or below, right? 30 or below Okay, no RSI reading of 30 or below indicates an oversold or undervalued market. Oversold or undervalued. Yeah, boy, you up since 6. Man, should be kicking my ass. So yeah, that's RSI. So how you use RSI when it's oversold, it's usually time for it to have a sell-off. I mean, overbought. When it's undersold, it's usually time for it to have a buy-in. Now, I play with the 50% line down here. Let me see what 50. I play with a couple of them. 50 being one of them though. So I usually look for price action. Okay, so like right there, it hit it to the downside. It got rejected back down, but then it broke it. Let me see. What do we see here? Shit, I see a nice. Oh, what is this on? This is on. We still on Nike. I see a real nice. Sort of. This right shoulder's off, but if it was on, could have argued this. Let me see. Here we go. So this right here be your neckline, right? Let me see. So you'll come down. Come back down. And then blast off. But you're supposed to stop right here at the neckline. And then boom. That will be your head and shoulders. Ride this up just a tad bit. Y'all see how I just seen that shape sticking out? Let's erase it. You'll start seeing that. Like to me, that upside down head and shoulders looks like Patrick, the SpongeBob SquarePants starfish motherfucker. You know what I'm saying? Now when you see this inverse, like almost, in fact, let's take a look real quick. Let's see. BTC, USD. Turn this off, turn this back over to candlesticks, which is right here. It's back on daily. Now let's see. Yep. In fact, let's see. Now it's two head and shoulders in here. Inverse. Damn it. As soon as it broke that neckline, boy. Okay, so I'm going to show you, right? Now the second one is kind of invalidated because of how sloppy it is. Y'all still with me? Both y'all still with me? Let me see.
Yeah, I'm still here.
Yeah.
Okay, cool. All right. So the first head and shoulders, right? Identifying patterns. Oh, hold on. I didn't even have a motherfucker on. That was the top, bottom, top. That's what gave you your inverse head and shoulders, which gave you a small pump from 12,000 to 13,100. Not bad. But inside this head and shoulders, right? What we wasn't thinking about I know I damn wasn't. Let me see. Right here. Oh, hold on. Wrong tool. Let's see. Okay, where we at? Damn, I keep grabbing the same damn tool. Hold on.
Quick
There we
question,
go.
man. Quick
Go
question.
ahead.
On
Go
the
ahead.
a Head and Shoulders really shows you like something is about to change. Like you about to go into a downtrend on the
It
Head and
shows
Shoulders.
you a reversal. It shows you a reversal. Let's go look at it. Let's run through it real quick. Head and shoulders. Here we go. That way we're not guessing or trying to put together any of our own ideas. I'm gonna tell you what it is. Definition. A head and shoulders, which is what we just looked at, a write-up on, pattern is a chart formation that resembles a baseline with three peaks. The outside two are close in height and the middle one is highest. In technical analysis, a head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. What I leave off? The head and shoulders pattern is believed to be one of the most reliable trend reversal patterns. It is one of several top patterns that signal with varying degrees of accuracy that an uptrend is nearing its end. The head and shoulders pattern forms when a stock's price rise. Well, I just showed you. That's how. But basically, yeah, it showed you that a reversal's going to come. That's basically it. It shows you a reversal's going to come.
Okay. And the inverted Head and Shoulders gonna show you the opposite.
Yes, sir. Yes, sir. So you had one to the downside, which gave you actually the one to the downside gave you the head on the one to the upside. That's the funny thing. If not for the one to the downside, you wouldn't even have had the upside head and shoulders. You know what I'm saying?
Right.
Funny. Hold on. Now, let's shift gears real quick. Scoot over to Fibonacci real quick for the last section. Man. Hold on, let me see something real quick. Let me see. Now where is it? Hold on. No, I ain't get rid of it. Hold on real quick. There we go. Just make sure that position was still open and in profit. Up 53% right now. Still good. And that's because I took a risk and caught what I thought was the bottom. You know what I'm saying? All right, so let's get back over here now. Now, Fibonacci. There we go. A Fibonacci retracement is a term used in technical analysis that refers to areas of support or resistance. Fibonacci retracement levels use horizontal lines to indicate where possible support and resistance levels are. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are 23, 31.8. And what the hell just happened?
Sound like you fading in and out.
And 78. Huh?
You fading in and out.
Definitely going in and out.
Okay. It just started happening?
Yep, remember when we got on Fibonacci?
Hello?
Yes, when we first got on Fibonacci.
All right, let me start over. Can y'all hear me clearly now, or is it still breaking?
We can hear you.
I hear you.
All right. All right. Fibonacci retracement, once again, is a term used in technical analysis that refers to areas of distance. Fibonacci retracement levels use horizontal lines to indicate, meaning this is future, to indicate where possible support and resistance levels are. Each level is associated with a percentage. The percentage is how much of prior price has retraced. The Fibonacci retracement levels are 23.6, 38.2, 61.8, and 78.6. While not officially a Fibonacci ratio, the 50% retracement level is also used, but it has nothing to do with Fibonacci. Fibonacci is basically starting with 0, going up, and then adding 1 to the one before. So 0 and 1 is 1, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, 5 and 3 is 8, 8 and 3 is 13. No, 12, 12 and 15 is 7, 8. No, it was 13. That was right. But what did I say? 8. I haven't fucked it all up. But that's how Fibonacci goes though with the numbers. The indicator is useful because it can be drawn between any two significant price points, such as a high and a low, and then the indicator will create the levels between those 2 points. If price rises $10 and then drops $2.36, it has retraced 23.6% of the way, which is a Fibonacci number. Fibonacci numbers are found throughout nature, and therefore many traders believe that these numbers also have relevance in the financial markets, meaning that the Fibonacci number ain't got nothing to do with trading. It's got everything to do with the universe. It's the spiral in your fingerprint and the seashell and the rose petal, and the Milky Way galaxy. That's Fibonacci. They call it God's code or God's fingerprint. Now, the indicator connects any 2 points that the trader views as relevant, blah, 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 the formulas, blah, 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 how they calculate, blah, 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 blah. Okay, what do Fibonacci retracements tell you? Fibonacci retracement can be used to place entry orders, determine stop loss levels, or set price targets, which I've showed time and time again how we used it for that. For example, a trader may seek a stock moving higher. So after a move up and it retraces that to the 61. Can y'all still hear me? I see it over here spinning around. Okay. After a move up, it retraces to the 61.8% level and then starts to bounce again. Since the bounce occurred at the Fibonacci level and the longer trend is up, the trader decides to buy. They could set a stop loss at the 78.6 level or the 100% level where the move started. Fibonacci levels, in fact, let me give you an example of what they're saying there, though. So let's see. Let's get rid of all this. Let's see. Let's go back to a weekly. Okay, perfect. Perfect. So we're going to pull Fibonacci from swing low to swing high on a weekly. Swing low is your lowest point. Swing high is your highest point of the new move. Lowest point in the last move, highest point of the new move. Now, if you're doing swing high to swing low, swing high is the highest point of the last move. The swing low is the lowest point of the new move. So let's get our fib levels. And we're going to use this magnet real quick just so we're on point with everything. We're going to go to the bottom. Remember, I don't have the wicks here. So there are also wicks. So if we were to use the wicks, let's look at the difference here. We'd be, oh, hold on. Thought he was going to catch them. It's all good. So we do a swing low. Nope, hold on, wrong way. There we go. So we got a swing low to a swing high. Now, as this starts to come down, this is what it tells you. By the time it gets here, it tells you, hey, you've lost 23.6% of your profit from down here. When it gets here, it tells you, hey, you've lost 38% of your profit from down here. By the time it gets to this number, it's like, hey, you've lost 50% of your profit from down here. Now, this is on the macro. Let's look at the micro real quick. Let's look at our micro scene. Let's see. See, we don't have an established bottom as of right now. But in fact, this is what I can do though. We already reversed all the way, and we probably came back up 61% of the way. So what I'm going to do, I'm going to go on the inside here. We did break it, but we did have a nice swing high to swing low to begin with. So on a 4-hour chart, we got our swing high right here, right? Down to our swing low right here. Now, what we want to look at, oh, hold on, is the reactions we got to the upside. So swing high, swing low. We came up. Let me get rid of that. There we go. You came up first and foremost, hit that 382, broke back down. You found some support. Now let's see what's significant about this support right here. Remember, we're going to plot this just based off of this support right now. Nothing else on the chart. Just boom, we found some support, bounced off it, came up, tested the 50, broke back down. Look where you first broke back down to. Same support. Broke that, turned into resistance, support, resistance, broke back up, same thing. Now you're on top of the 382, right? You're using the 382 as support. Real simple. Broke back down to where? That same fucking support level from right here. I'm telling you, it all makes sense, but it's not really there. So what happened? It hit the support level, bounced up, resistance, broke it, came back down for the retest. Remember, this is a retest. This is a retest. That time it gave you a nice blast off. You broke it. Look at that. Retest, came up, broke it, retest. So now you're going from getting stopped out at the 236, the 382, the 50, coming back down, consolidating around the 382, finally breaking the 50, right? And then coming up, breaking the 618 and coming up to test the 786 almost flawlessly. Remember, these lines are invisible. But look at this. Flawless, broke down. Then you go, do what happens? You break right back down. 618, 50. Even though you broke through the 50, you came back up to retest it though. Look at that. Solid. And you look, in fact, you had a run up from 11,169 all the way up to about 13,000 and came right back down. Look what you retested, that same damn line again. Once again, and this is from, if we first established it in the 3rd of July, came back the 6th of July, and then once again the 11th of July, and then once again even the 13th of July. That's some on the way back up when we turn around. That could be some major resistance to the upside since it was so strong a support. You know what I'm saying? Before. And now what's going on? We're breaking back down and going right back down towards that 100% once again. So what could we be looking for? A bounce off of that once again. Unless we are, in fact, we did. I forgot I got the wick. I forgot I turned the wicks off of this. So we got wick actions pointing everywhere too, though we can't see them because we're just using the body closeness right now. Now, how would you use Fibonacci? Well, let's just say we would have missed this run, right? You would use each one of these breaking points or Fibonacci retracement levels as an indicator, meaning if I miss this run up and it's starting to reverse, okay, I know the first level it's got to come to is this 236. So, okay, that's at 10,792. Let me set a stop by at around 10,800. That way, if it does break it, I don't have to be watching it. I'll get my order picked up, right? Then I can easily take my profit at the 382. That means if I get picked up at 10,800 and I take my profit at the 382, all I gotta do is just set a take profit at 11,377. And look what happened. It would have got hit. Broke back down, would have allowed me to re-enter, and then I could have take profit at the 50. You see how you easily, instead of you having to go find, like, man, what price should I buy or sell at? Fibonacci tells you a lot. You can use these to take profits. And then once we hit the 6786, get the breaking back down. If I wanted to short this, I would short and I would take profit at these levels then. Right? Boom. And this is on the micro. Remember, we was on the macro first. In fact, let's go a little bit smaller. Let's go even to a mini micro. Let's see. Boom. It's not even worth it. Until this thing finishes up, it's not even worth going on the mini macro. Gotta figure out what it's doing. LTC price rapidly increased by 2.8%. Okay, that's a good thing. See what happens here. EOS is looking nice right now, too. I'm gonna let y'all know that now. EOS looking nicer than everything in the market. Up 2% within the last 24 hours. While everything else is in the red. All right. Any questions or comments?
I'm good for right now.
Brother Drew?
Now I'm good right now. I just need to sit down and study it again.
Right. Okay. Anything else you fellas want to go over? Anything you're not clear on? How about you, Brother Drew?
Nah, I think I'm good for the moment.
Cool. All right, well, that was basically the session. Like I said, it is recording. I'm gonna end this now, let it finish processing, and then both of you will be shot a copy. If y'all need any help with anything within the video or anything moving along, y'all already know y'all can hit me up. I thank both of y'all for taking me up on the offer and allowing me to show y'all the chart reading. All right.
Appreciate you.
All right,
All right,
you gonna send it to the email?
No, I'm gonna send it to y'all. I'm gonna send it to y'all inboxes. I'm gonna send it straight to y'all inboxes.
Okay.
All right, that'll work.
All right,
All right, to the next one, brothers. Peace, power, and prosperity.
All right, have a good one.
Peace.